Good evening, everyone. So, the strategy I'm going to talk about is really systematic. It has no discretion of any sort, and it is really a simple way to look at market and unlock a new perspective in the market that you might not have unlocked yet because you are looking for everything to make sense, and that is not what trading is all about. You need something that's extremely simple, it's easy to follow, and you can just repeat it. It's rinse and repeat, and you just grow your equity. Now, I'm going to talk about a few steps before to lay out the land on how the strategy is going to work out and what steps you need to have before you start looking at the charts. So let's see here. The origin for the strategy begins on the 4-hour. Now, from 4-hour, we go directly to 15-minute. We do not have any business on hourly, 30 minutes, 45 minutes, 4-hour to 15 minutes. And then 15 minutes is the execution part. If you really want to refine it down to 5 minutes, you can do that. But I would suggest you would stay at 15 minutes once you get the grasp of how the strategy works. And once you get good at it, you can then maybe refine it to 5 minutes even further. So let's look at the systematic steps. What steps do we really have here? The step number one is that you need to have a fair value gap on 4-hour. If you don't have a fair value gap on 4-hour, there is no trade. Now, once you have the fair value gap that's opened up on 4-hour, let's look at the systematic steps. So, number one, you need 4-hour fair value gap. Now, if you do not have a 4-hour fair value gap, there is no trade. You just have to wait for the 4-hour fair value gap to open up. And once the 4-hour fair value gap opens up, you wait for the price to dip inside that fair value gap. Now, you don't have any business to do on either daily or hourly. Your focus time frame is 4-hour. Now, once we're inside that 4-hour fair value gap, you focus on 15-minute dealing range. Now, you have marked out your 4-hour fair value gap. Price is inside that. Now you go to 15-minute and you wait and see the clear dealing range. I'm going to show you a few examples here to give you a good grasp of this. The next thing you do is wait for the change in the state of delivery. Now, the change in state of delivery must happen after the dealing range has been violated, which I'm going to talk about. Once that happens, the change in the state of delivery is basically an order block. That is your qualified entry. You can then execute on 15-minute, or if you want to refine it down to 5-minute, you can do that either. But for now, we would focus more on 15-minute, and I would show you a few examples that we refine down to 5 minutes. So let's look at the live chart now. Let me take this out. So this is your USD recent price action here. So what I want you to note is grab your rectangle. Note all the 4-hour fair value gaps. So this is 4-hour, and this one you see here is your 4-hour fair value gap here as well. And the next one, nothing here. You have this one, right? And then price broke higher. We left this fair value gap here as well. So we have a handful of examples to look at. And now, again, this is your USD. So you don't have to look at your USD. You can practice this on any pair. It could be gold, it could be NASDAQ or S&P, whatever that is. So I'm just using your USD as an example to show you how this works out. So let's look at the first example. Say you are here, right? You marked out the 4-hour fair value gap. Now what you're doing is you're waiting for price to dip inside the 4-hour fair value gap. Maybe you can put an alert here to give you some sort of alert when the price hits this fair value gap. Same thing here, the same thing would be here, and the same thing here. Now, once we are inside the fair value gap, what do? We go to 15-minute. So let me just go to 15-minute here. And let me just take this out a bit so we can focus on this fractal. We are inside this 4-hour fair value gap. Once we come inside it, what I need you to do is mark out your dealing ranges. So what is the dealing range? A clean high and low. So we have a clean high here and we have a clean low here, right? Pretty simple for our failure gap tab, clean highs and lows in a dealing range. And then what you do is you wait for price to break the dealing range low here. And then this candle here, these 4 candles you see, is one order block. Now once the price trades below this on this candle, this is classified as a change in a state of delivery. Now once this candle closes right there, you can go in and you can test this out for a shorting opportunity right at this level. Where would your stop be? Your stop needs to cover the order block or the swing high within the dealing range. You need to test either way to see what works for you, but the concept here stays the same. For our dip, 15-minute dealing range low taken out, change in the state of delivery at the same time here at this candle. The next candle taps us in for the short. So if I were to use this as an example, right, the next candle, the same level I'm using, stop above this high, covering the order block level as well, and I'm targeting the lows or 1 to 2, however you want, right? The next thing, so this was a 4-hour fair value gap. If you go again, this one here, we dip inside it. What do? We go to 15 minutes. Now, where is our dealing range? The dealing range high is right here. The dealing range low is right there. Now, did we take out any of these levels? We did not. So what do? We wait. Where did we take this out? Right at this candle. Once we took this out, then what happens is that these all consecutive candles is one order block. So if you look at 15-minute, just 1, 2, 3, 4 15-minute candles, right? And on hourly, this would be a one beefy candle for a buy, which is a bullish candle. So this is my change in a state of delivery right here. Once this change in the state of delivery happens, what do? I go here. Once we tap inside this level, I go short. Can go short right here. Where would my stop be? This is quite a big range. You could give it somewhat here, and you can wait for the price to trade lower. Right? Now, had you kept your stop here, you would have been stopped out. Had you have given it some more breathing room, as we did here, the price would either come up, still accumulate inside this order block or the change in state of delivery, and then trade lower again. Right? A beautiful trade here as well. Now, we have this trade here. We have the next trade here. Let's look at this one. What happens after? We go to 4-hour, we mark out our fair value gap. Now, once we tap this fair value gap, I go to 15 minutes, right? Where's my dealing range? My dealing range high is right here, and my dealing range low is right here. Now, did we take out the dealing range low here? No, did not. What happened? I think this was Powell speaks or something, some news coming up. Price broke all the way through the 4-hour and we went all the way higher. No problem. You just wait. Maybe there's no opportunity on this pair. You can look for another pair that might have something to work with. But as a trader myself, I would advise you to not trade just before the Powell speaks or FOMC or NFP. That could really hurt you as a trader. So you should be aware of what the news calendar is for the day or for the week in order to stay away from those kind of situations in price. What happens after the Powell speaks, everything is settled down. We open up another fair value gap on 4-hour. What do? We wait for the price to dip inside. Perfect. We wait for what? A dealing range on 15-minute. Dip inside here on the 4-hour. We have the high dealing range and we have the dealing range low. Dealing range low was taken out beautifully. 1, 2, 3 consecutive candles. What is that? An order block. This is your entry. Once the price broke after this changes the state of the delivery here. So I can do what? Go short right there. Where would my stop be? I will give a bit of a breathing room covering the mean threshold, which is a bit advanced concept. But if you want to keep, you can keep it above the midpoint of this order block. And then what you do, you let the price do its thing. And that's the beautiful trade here as well. So we had trade here, and a beautiful trade here. You're waiting for this, but this never broke the dealing range low. Now, this is just few examples and how you can really strip down on just one model and really just go all in. Now, the 5-minute model here, let me take this out. So the 5-minute model for a refined entry here would be that we took this out. This is our entry, right, on 15-minute. Then what you can do, right at the point of entry, once we have qualified that the dealing range low has been taken out, we have the change in the state of delivery here. This is the ideal entry on 15-minute. Right at this point, when I mark this out, I can go to 5-minute. And I can do what? The same thing. What is my dealing range high? Right here. What is my dealing range low? Right here. Dealing range low was taken out beautifully. What is this? 1, 2, 3, 4. You can use this as an order block as well, because this the body of the candle is above this one, so I would more be considered about this as an order block. So let me take this out a bit here. Oops. So this was my original entry for the 15-minute, but then what happens? We trade lower, dealing range low was taken out here. My order block resting right inside the dealing range. Now once we change the state of delivery here and take the dealing range out, I use the same premise for the price, which is here, stop above, and get in the same move which we did on 15-minute, but this is now refined entry on 5-minute. As a beginner, I would say do not go for the refined ones, rather use the 15 minutes, because it's going to give you almost the same kind of ranges in price. But as you get good at it, you can experiment with the 5-minute entries. I hope this helped. This is a really stripped down model on how you can just have a beautiful systematic model you can use almost every week. This is universal, so you can use this on any pair. It is not just bound to your USD. If it helped, please leave a comment or like and share your thoughts on this.